Okay, you should all be able to see Blackboard now. Is that right? So this is my Blackboard account here. So some things that you see that we have in common, other things that you're not going to have yet. But what you will see is that I have the module to-do list set up already. As you know, this is the step-by-step plan that I use. So before I was teaching anything online or other things, I used to have to have a lesson plan or a teaching plan that sort of outlined what are you going to be doing in a certain class. This is basically similar to that. It's an outline of everything that we're doing. And so the very first thing I'd like you to do is this very first type of thing. There is a video only on the concept of risk, because I think that's one of the most important things to understand, that risk exists, and thus there's a need to cover that risk, and insurance is one way to do it. And then there's a video for insurance needs for college students. And since most of you are kind of in that particular category, it's a very interesting video to do. There's also a discussion board question with this video. So it's not they're going to watch the video and say, oh, that's nice. You're actually going to be doing a discussion board question for it as well. Then as you notice, I start with chapter 10. I start with chapter 10, which is about property and liability insurance. And so this is going to be the first stop here. There are lots of good videos that I have been able to put together for you. The basics of property and liability insurance, what homeowners insurance is, what a peril is, what subrogation is, actual cost, replacement cost, things like that, what some of the floaters are, deductibles and other types of limitations, how you insure valuables. So this one would be definitely for Clark for earlier that he was telling us about his valuables there. So this is important. And then to understand renter's insurance, which is very, very important for you to do. So this is sort of an overview a little bit on that. And then auto insurance, which we're going to be looking at in detail, what determines auto insurance costs. Oh, actually, we're not going to be doing this live. This activity is not going to be done. We're actually going to be doing it in class. It's not a discussion board type of thing. But there are discussion boards to it because you're going to have to understand the concept of negligence and liability. You're going to have to understand there's a ton of uninsured drivers out there, and that they cause a risk. And then the end of chapter 10 with a quiz. Then we're going to do chapter 9 and chapter 8, and I'll get to those a little bit later. But the very first thing I'd like you to do without delay is step 1. Okay, step 1. Here is your discussion board question, insurance coverage for college students, video analysis. It's based on that video. Slideshows that we're going to be starting today. Liability and negligence, super important, and uninsured. I'll be putting up all the other stuff. All the chapter 10 stuff is up and ready to go. I'll be adding to the other stuff a little bit later this week and this weekend. So you'll see that populated. But this is where you have to start, and this is where we're starting. Okay? All right, so the very next thing that I want to do with you is review the important parts of chapter 10. Can you see a slideshow in front of you or no? Okay, so I will go ahead and do one thing to help out. I'm going to stop the share, bring us back to our main, and now I'm going to go to the slideshow. Sometimes you have to kind of back out and go back in. Okay. So now, do you see a slideshow? Okay. It's amazing how that works, eh? So this particular slideshow looks at property and liability. And so it's very, very important to sort of understand a little bit about this. So first of all, these two go together. If you own property, things are going to happen on your property, and so, or with your property, and so there's liability that's involved. One of the things that people don't understand a lot of too is one of the things that can be considered property for purposes of lawsuits are your pets. A lot of people have dogs or whatever. If you are walking your dog somewhere and your dog decides to bite someone, the dog is your property, and technically you are liable for that. Right? So it's one of those types of things where property has broad definitions, and liability follows you wherever you go. Okay, you are responsible for so many different things. Even if someone borrows your car and uses your car, it's your car. If they cause damage, guess what? You're also on the hook. You're also liable for that. Okay. Someone is, you let someone use your apartment for the weekend or use your house, and something terrible happens, even though you weren't even there because they were maybe house sitting. Well, guess what? You're still on the hook for that. You're still liable for that. Why? Because it's your property. You own it. It's your problem. In most instances, what we think about is what we really want to protect is catastrophic loss. Catastrophic loss is probably the worst thing. So having your house burned down, having your car totaled would be examples of catastrophic type of losses, right? And so this is often what a lot of people are thinking about when they're saying about insurance. But a loss certainly doesn't have to be a catastrophic loss to cause you financial injury, right? This sets up the idea of what a peril is. So a peril is something that causes the loss. Like a fire is a peril. Theft is a peril, something that caused the loss. Okay. And so that results in, potential financial losses that you probably don't want to be responsible for. You probably want some protection on that, which is the purpose of the insurance. Again, liability offers protection against any financial consequences about your responsibility for that property in a loss and the personal injury to others because of that loss. So it's really a very, very important thing to really understand. And a lot of people, my son is among them. I'm an adult now. Okay, well, let me tell you, as an adult, welcome to the world of liability. Welcome to enormous numbers of legal responsibilities that you didn't know you had. And this is one of them, okay? But anything that you do, and particularly with your property, including your car, you are ultimately responsible for under the law, And that's really one of those types of things that really evades a lot of people. This is big. This is big. And so it needs to be covered because you do not want to, you don't really want to be held responsible by the court for that. Okay. There's several key principles that are mentioned. I want to talk specifically about this idea of indemnity. This is talked about a lot. So indemnity basically is this idea that you're going to be brought back as best we can to the state you were in before the loss. So if your car was totaled, you got into an accident, but it was fixable. Well, then the principle of indemnity simply means that the purpose of the insurance is to try to help you fix your car so it gets back to the place it was before the accident. It's not going to mean you're going to get a brand new car. You're going to get, the very best things that are put on your car. You're just going to have it replaced, so it's like it never happened, okay, or as close to that as possible. And that's really what insurance is based on, this principle of indemnity, right? That we're not going to make you rich by having insurance. We're just simply trying to replace and bring you back to the spot you were in before the loss happened. That's basically indemnity in a nutshell. Okay. So there are certainly exposures that we have. Um, Property loss is really what we're focused on here. Um, and so this is really what this is sort of about. One of the most important things that you really kind of need to do if you're going to have any insurance is to make sure that the insurance company realizes you actually own it. And so if it's ever damaged or lost, it can be insured. Because this happens a lot where people get rental coverage, and they have a lot of stuff in their house, but they have no proof of ownership. And so something terrible happens, and to something in their property, they put a claim into the insurance company, and the insurance company says, well, we didn't even know you owned this, right? Do you have any proof that you owned it? Well, this is why you should, as Clark was saying earlier, try to document your inventory. I hate to put you into a retail store mode, but you have to kind of do physical inventory. So pictures of your property, any, even if you take a video of your property, so you just walk around the house. You all have phones, you have video on it, so you're walking around the house just basically saying, this is what I own. So you have some proof of ownership of it before something terrible happens. Make sure there's a date and a timestamp on that video. So you actually have an inventory of your property, because in case something does happen, you want to make sure that you can prove ownership so you can recover. Otherwise, the insurance policy isn't going to do as exactly what you wanted to or intended it to do. Okay. Make sure too that you have insurance that are covering all the possible perils. There are some perils that insurance companies will not touch. Floods are one of them. Mostly because it's almost impossible to determine how many floods we're going to have every year and what areas. And it's impossible to determine what the cost of those floods would be and how to then bill your clients the appropriate premium, so you can have that money to cover the damages. So floods are never covered. Floods are never covered. Neither are earthquakes. Earthquakes are not covered at all. Yeah, it's just impossible for a business to make money with these, and so they don't cover them. Believe it or not, when your sewer backs up, oftentimes that's not something that they can predict, so it's not covered. If there's a mudslide, if there's some mysterious things happening, in the case of war, radiation, I would imagine, you know, extraterrestrial beings coming in and grabbing certain stuff, putting it on their spaceship and taking off. Those things are not covered, okay? And so in order for things to be covered, the insurance company has to have a reasonably good idea of estimating that this could happen to a large group of people, and can estimate the cost, damages, and then can cover. If not, you could possibly get specific perils covered under a special policy called a rider. One of the most important words you're going to be learning is negligence. Negligence is usually means that you failed to act responsibly or to take steps necessary to protect others from harm. And negligence is one of those types of things that create losses. That's what liability is supposed to help to cover, okay? And so again, liability insurance covers you against these losses, including the legal fees of the people that you've hurt, okay? Liability is part of your homeowner's policy, your renter's insurance. It's certainly part of your automobile coverage. Auto policy has liability coverage. What is really important to do If you don't have enough coverage, is of course to boost them on these particular policies. But if you need more, there's something called an umbrella policy. So I have both homeowners and automobile insurance. And I have an umbrella policy which basically covers, it's like an umbrella, what an umbrella does is covers you. It covers your homeowners and my auto policy for liability up to $1 million. So, and it's, I think the policy only costs me maybe $40 a year. I mean, it's really a very cheap policy to have. But it covers, the umbrella covers everything. It covers everything. Because I don't think there's enough on both of these. So I want more. And that's only because if you have assets, you want to protect them. Again, I've already talked to you about indemnity. You're not going to be compensated in the amount exceeding your loss. That's not the purpose of it. You're not going to profit from a loss. Okay. And so you're going to be made whole or as close to that as possible. You're going to go to the point where they're going to bring you to the point where you were before the accident or loss happened. Okay. And so this is a big thing here to understand and know about. One of the things you will be asked about when you buy a auto or homeowners policy, renter's policy, is if something does happen and you need to have things replaced, do you want the actual cash value, what it's worth today, or do you want for it to be replaced at the full replacement cost? It's cheaper to go with the actual cash value because it's the replacement cost minus depreciation. But what a lot of people want is for things to be replaced as they were. And so replacement cost is a little bit more expensive than cash value policies or actual cash value. Okay. Subrogation basically is a right given to an insurance company that allows the insurance company to sue someone else to get their money back. So they'll cover you. They'll cover you. But it might be someone else's fault. So subrogation allows the insurance company now to go after that person or other insurance agency or business on your behalf to collect money for them. If they make any additional money on that, they keep it. Okay. So it's a wonderful policy, but it helps the insurance company. Okay. So there's other insurance that we'll certainly get into. I'm going to be focusing in very specifically on your auto policy very soon. Auto insurance, homeowners insurance, they don't have any co-insurance. They actually have deductibles that we're going to be talking about. So there's a lot of homeowners insurance policies. Renter's insurance is called HO4, homeowners policy 4. If you have a condominium, you'll have an HO6. If you have anything specific, anything very special, an antique home, you live in a castle, shit like that, you're going to need a special type of policy that covers a little bit of different things that the normal home would. So that's just simply that. But if you're a renter's policy, you'll have an HO4. If you have a condo, you'll have a homeowner's policy HO6, just a different form. You don't necessarily have to know them, just understand that because there's different places to live and different living arrangements and different property, there's different forms. So again, what perils are covered is really what you're buying in an insurance policy. And so, like I said, there are certain perils like fire and theft that are covered, and other perils like floods and earthquakes that are not covered. So those types of things are interesting to know because those are quite common. You can cover other perils. You just have to pay more for them. You know, this is something you talk with an insurance agent about. The same is true for liability and negligence. There are many perils that are not covered, like libel, slander, defamation of character, and intentional wrongdoing. Okay. Um, so those will be, again, something that you need other coverage for. So what does matter for folks that are renting or owning a house? Well, the type of structure is what you're really kind of looking at. The location of that structure. It's there might be other factors, not just specific to the homeowner, but also specific to the home. How close are you to the nearest fire hydrant? How close are you from the nearest firehouse? Which is the most terrible thing that could probably happen is a fire. But when you actually get insurance, part of the cost of that insurance includes things about you, including your credit score, and other factors that we're going to be talking about a little bit later, such as your male or female, believe it or not. Gender matters. It's not discrimination. Men are, for example, for car insurance, for example, men are just more aggressive. So men tend to have a lot more claims or accidents than women, in essence. So there, if you're married, the type, you're a little bit more careful. So there's other types of factors that actually insurance companies use to determine risk. So it's very interesting. It sounds a little discriminatory, and in some cases it might be. In other cases, it's really not. Okay. So what the purpose of homeowners insurance is to make sure that your unit and anything attached to it is protected and covered. Okay. If you have other types of things, like a RV, a motorcycle, a golf cart, whatever, that's not covered by homeowners insurance. You can get a lot of other things covered by getting what's called a floater, personal property floater. This can provide either very specific coverage or blanket coverage for very expensive personal property, thus what Clark was mentioning earlier. That would not normally be covered under the property insurance that we would normally see. Okay. Renters insurance is actually quite cheap. You can get a lot of coverage, $15,000 to $30,000 of property coverage for actually, I pay less than $100 for the year for the whole thing. So you can actually get a decent amount of coverage for a very, very small price, less than, in some cases, about $10 a month. We'll give you $10,000 or $20,000 worth of property coverage. And it's well worth it. It's well worth it. If you don't have renter's insurance and you're renting, you're taking a risk. You're assuming the risk. Okay. There are some limitations on what they will pay for, like all insurance policies. There are some limitations, and that's true for personal property. Most of the time, it's actually cash value, which means depreciation is removed. If you want it to be at full replacement cost, it's going to be, you can get that, but it's going to be a little bit higher. For that coverage. Okay, so I'm not going to go over these particular details in essence, because I'm going to focus more on the details of your auto policy, but the details are there discussed in your book. Deductibles are probably one of the most important things you need to know about insurance. How much you are willing to pay to cover in a loss before the insurance company kicks in, before the policy you have kicks in. The higher your deductibles, the lower your premium, the lower the price of the policy. And so it's tempting for a lot of people to say, "Oh, I can save money on my insurance by having a higher deductible." Okay, yes, you can, but what you're doing is you're taking on more of the risk. Do you want to do that? Is it worth the extra $50 to take on an extra $1,000 or $2,000 of risk? That's the question you should be asking. A lot of people don't ask that. Um, but a deductible is, again, it's what you're paying for an incident before the policy kicks in with its coverages. Of course, all policies have certain limits. So even in a homeowner's policy, if you're robbed, there's a suit that you can get coverage, but the limit for having cash in the house is $200. So if you're using your mattress as your bank account, you got a lot of money there, and you're robbed, and you have a homeowner's policy, a renter's policy, you are not going to have a lot of that covered. Deeds, passports, other types of valuables like this are only covered up to $1,000. If you have special jewelry, it's only covered up to $1,000. If you want to have very specific ones, and you're going to need a rider, you'll need a special policy for that. Usually, liability is limited on policies to 100,000, which is why an umbrella policy is often needed. Okay. There might be some higher limits on all of these that are possible, but you're going to pay for those. Okay, and we're going to spend all of our time next time on the auto policy, which is super duper important for you to understand because you all drive, so it's important to understand the risks you're taking and how to cover them.